What's going on YouTube? In this video, we are talking about, I believe this is pronounced Coupang, ticker symbol CPNG. This particular company was brought to me by a recent subscriber, and he wanted me to value this company. And if you are interested in wanting a company valued, drop it in the comments. We'll add it to the list and get it done. If there was ever a company for me to be excited about, this one I'm actually really excited about, and hopefully I'll try to stay as unbiased as possible as we go through this analysis. Year to date, this company is up 18% over the course of 1 year. Dead flat. So Coupang owns and operates an e-commerce business through its mobile applications, internet websites, primarily in South Korea. It operates two segments: product commerce and growth initiatives. The company sells various products and services in the categories of home goods and decor products, and many other products. It is basically an Amazon over in South Korea. We'll take a look at their website here real quick. So what they do is Coupang's customers benefit from exponentially better services, 24 hours a day, every day of the year, same day delivery, dawn delivery, rocket fresh. Everything we do is built around the lives of customers and so on. Like this company is very impressive. I personally am very impressed with it. I like how they have no cardboard. They use these little, delivery bags that they use. You can have it delivered, your food delivered. You can order food. You can have your product that you delivered that day delivered to you the same day. It's pretty cool, and all of their fleet of vehicles is EVs, or most of them are, not all of them. I believe most of them, but they're transitioning to mostly all EV fleet. And you can see here, you get your food delivered into this, bag, I guess you would call it, that's insulated, so it keeps your food fresh, or at least cold. And then you can order food if you need to, and looks like they offer videos and stuff like that. So to me, it's like an Amazon, just in a different company, and I think with a different business model as well, because they're looking to do same day delivery. So if you order something right now, you can have it delivered probably in a few hours, depending on how far away you are, which I find to be potentially very expensive, how they are able to pull that off. So that is a concern I have. And the other concern is they're looking to expand into Taiwan, which is great, looking for expansion, but I think Taiwan it still has that ties to where it could go to war. I believe it's with China, that China wants to take over Taiwan. And so that is a little bit more of a concern. So there's a lot of things I like about this company as I read through it. However, there's a few big things that are a little concerning also. But let's take a look at the financials on this company. So our revenue and gross profit here are the revenue's exploding higher. I mean, it's doing very good revenue wise. Gross profit is growing, and our net income is beginning to trend higher as well. We can see this over here. So we have been kind of negative here, but we are starting to pull up into the positive range. Our gross margins are exploding higher. Our net margins are also growing in turning positive as of lately, so that's pretty cool. Our revenue and year-over-year growth rate here, we're seeing 7 to 15% growth rate. So growth could be slowing down, but they are only in South Korea now. And if they do expand this over into Taiwan, which they've done, they said they're going to focus heavily on it in the coming years, which could lead to more explosive growth at the company. Return on invested capital, pretty much flat. Cash to short-term debt, pretty decent. Could be I'd like to see a little more cash, but overall, their cash to debt balance is not terrible. Especially if we compare something like that to Amazon, I think they're doing pretty good. So net income to free cash flow, we have more free cash flow than net income. I'd like to know why we have so much more free cash flow and net income, which we can probably get a good understanding. We have our net income here, stock-based comp, operating free cash flow, and then capital expenditures. And so we get free cash flow of 1 billion. So we'll have to see. Maybe we can take a peek at the balance sheet real quick, or not the balance sheet, but the cash flows, and figure out where that extra money is coming from. Share count dilution, kind of shocking. I mean, this is a company that is growing, but they're not diluting the shareholder, which I'm impressed with, honestly. Capital expenditures are exploding, but if they're going to be expanding into, other countries here, I think you're gonna have to kind of expect that. So let's take a look at their most recent earnings release and figure out this cash flow thing. So we're right here on the balance sheet. I want to take a pit stop on this real quick, and I just want to point out the inventories on this company are actually year over year shrinking, which is good, which means they're turning over product, which is always a positive to see in a retail business such as this. So we do know they've got plenty of cash. They've got a lot of cash over here, and their cash pile has actually grown almost a bill. But that is something we want to maybe look into and figure out where that extra $1 billion is coming from. So as we come down here, the cash flows, here's our net income. A few big key components that are getting added into our, cash provided by operating activities. As we can see, our accounts payable grew by $579 million, and our equity-based compensation or stock-based compensation grew or is up at $156 million as well. So you add those two things in, that's $700 million plus your net income. That's not quite all of it, but that's a good chunk of your cash provided by operating activities. But you can see there's not there's not a lot of stock-based compensation. There is, but not a lot. At least in my opinion, I don't think that's too much. We do have depreciation as well. There's a few other things in here that get added in as well, and a lot of changes to their liabilities and assets. So we come down here, we have our CapEx of 471 million. We divide that off. Our free cash flow for the last 6 months was 850 million. So that's good. The year before that looks like it was actually negative. So we went from a negative free cash flow of 500 million to a positive free cash flow this year of 850 million free cash flow. So pretty good. And honestly, that change in cash flow there is probably just, they were negative income and now they're positive net income as well. So I mean, they're heading in the right direction, and I wouldn't say they're skewing themselves, changing, so you're adding in so much amortization and depreciation and stock-based compensation, all these other things that they can throw in there to dilute the shares and make their free cash flows look better than what they really are, but there doesn't appear to be doing that. They have added more debt, which is fine. Um, Looks like short-term borrowings and long-term debt. So you have to add that in over here. So really, it looks like our increase to cash was mostly from relatively acceptable things, practices, in my opinion. I don't see anything concerning on the balance sheet or the cash flows. So far, I really do like this. I'm digging this quite a bit because uh, everything is looking like it's got good management behind it. So good thing to see there. So we have our two comps. We have Amazon and Alibaba. I threw Alibaba in there. I feel like it's something worth comparing to, I believe. So we have one red flag, and that is just the share count has been increased by 2% year over year. Market cap, obviously, this company is so fresh that there's not much of a market cap on this company compared to the other two that we are comparing to. Revenues, gross profit, same thing. It's just so minimal compared to what is potentially possible with this company. And then the growth rate, is exploding higher, 60% EPS growth with 12% revenue growth. Gross margin sitting at 25%. And this is what I want to compare to with Amazon because I find this to be very comparable to Amazon with how it operates. So operating margin, we can see compared to Amazon, pretty close. So Amazon's at 3.2% operating margin, and I'm going to call them Cpng is sitting at 2%, and our profit margin just shy of 2%. So it's in line with Amazon currently on margins here, except for over here on our gross margin, doing a lot better than Amazon. And obviously Amazon has other things involved with its company. It's got AWS and so many other things, but I think it's something that we can kind of see margin wise anyway. Return on invested capital, 5.5%, 4.5% in comparison, and PE 70, and Amazon's at 103 for a PE. So we kind of gives you an understanding of where Amazon's sitting and where this Cpng is kind of sitting as well. So it gives us an idea. So let's look at the calculator. Let's figure out what this company's worth. So Peter Lynch gives us value, or gives a value on this company of $14.20. Our multiples comparison, we get $14.70. We have our manual PE sitting at about 18 years. Price to book, average 15, currently sitting at 11. PEG ratio, however, this, in my opinion, should be more of a growth company. It is actually a growth company. the PEG ratio is telling us this is very, very overvalued currently. Grams valuation, we get $13.93 per share. And our discounted cash flow valuation on this company, analysts did not give us a growth rate for free cash flow, which makes me even more interested in this company, that if analysts really aren't too interested in analyzing this company, this could be a pretty solid buying opportunity for us small investors. Let's see how many analysts are. So there's only 5 analysts that have valued this company. Pretty interesting, honestly. That's something that Peter Lynch likes to do, is find companies that analysts haven't seen yet. So discounted cash flow valuation, I gave them a 20% free cash flow growth rate. Based on what they have done, they are, I mean, except for 2022, they've slowly grown this free cash flow, and ever since this year, really, they've turned a positive free cash flow. So, assuming that is maintained, we're looking at a discounted cash flow price per share of $19.93. Rule 72, again, Seeking Alpha didn't give us a growth rate. And since we have so few analysts over here, it does throw these numbers off a little bit, because some analysts could be expecting some high growth over at this company, and they could be trying to pump this stock up higher, even though it's not worth it. So, gotta be a little careful with that. But overall, I gave them a future EPS of 2. We do have a growth rate of 44.58 based on these two. Yahoo Finance had 90% growth. I did not agree with that. So I kept it at, I believe I just had 40 in there, didn't I? So I kept it at 30, and that's half of what we just got based on the other 5 analysts we just looked at, for a growth rate EPS of 59. So I gave them a 2 for future EPS, gives them a fair value of $44.58 per share. So we have our summary. Currently, Cpng trading at $17.62. And based on all the numbers we just went through, all the calculators, gives us a fair market value of $21.46. 15% margin of safety, or 30% margin of safety, is $15. Analyst price target is $21.60. So right in line with where analysts are expecting this company. So on the stock chart, we don't have a whole lot of data because this is a relatively fresh company, but we can see that we are making higher lows, but we are also making lower highs also. So we're kind of in this wedge pattern here. And based on reading up on the little bit of reading I did on this company, and how the company is operating and its business model, very interesting to me. There's very few analysts currently looking at this company. We have also, if you take a look, our short interest on this company is actually only at 1.6%. So that's even more interesting to me. I think this company is very, very interesting. And just take a few minutes and look at their website and see how they operate their business, and see if this is something that interests you. But it definitely interests me quite a bit to look further into. And I think there's a good chance I might be a future investor in this company, maybe even at a little bit of a premium, such as like right about now. And maybe we get a retracement back, and I'll add a little bit more to my position, assuming I buy it if I like it. But so far, based on what I've shared with you guys, I like it a lot. I think it's worth looking into the company more, which is a very opinionated side of things, which is why I typically don't share that side of things very often. But that is it for CPNG. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.